Nico, what an introduction! What a countdown we had today. How are you doing today, Nico?
Indeed. It gave me goosebumps a little bit, to be honest. Right? Gave me goosebumps a little bit. I'm all good. I'm all good. Weather's fine here in Munich, so all good. How about you in Malta?
Well, I'm doing fantastic here as well. Thank you, Nico. It's a beautiful day here, and the sun is shining. And as you prelude to the live stream, as you saw, we have a sponsor today. Isn't that exciting? We are moving. Look at us moving up in the world, Nico. So
Yeah, we do.
yeah, these are the weekly news from now on, presented by our good friends at PlayZone here today. So shout out to Thomas and the guys who are really happy to have that support, so we can continue doing this great and fun weekly news. But Nico, I mean, as per always, we keep repeating it, but it's been a great week. It's been an interesting week for the industry. Can you summarize a little bit some of the points that we have in front of us to discuss today?
So first of all, we will be joined by one of the affiliate heavyweights, right? Feda Mecan, founder and former CEO of KaFe Rocks. They have just been, acquired by the Glitnor Group. He will join us in a couple of minutes. I'm thrilled to just hear some insights from him about the deal, about how things will evolve at KaFe Rocks, because they have I wouldn't say it like quite unique, because unique seems like boring. They have a very positive way of how they actually structure their work, and I'm pretty sure that Fetcher will give us some insights on this one as well. New York, and how things might evolve in New York with the iGaming casino bill just around the corner. You had a great podcast with the Senator Edibu, who is one of the movers and shakers behind the sports betting bill as well. So that guy obviously knows how to push things through until they are finally signed into law as well. Then we will speak about things which happened in California, or rumors which are strolling around in California. DraftKings and the CEO of DraftKings had some pretty messages he just shot over Twitter, and there's some headwinds which he is facing as of now. So he's pretty much like the negative Elon Musk, probably. And then we will just see what the audience wants us to zoom in as well. Malta is processing in their getting away from the grey list. So we have some interesting topics already lined up. So the two of us, but as usual, this is the plan, and we are open-minded to just execute it in any other way like the audience wants us to execute it.
Absolutely, Nico. As per usual here, we are absolutely live today. So any comments, feedbacks, or corrections to our strange statistics and the comments here is very well welcomed, of course. But to start off with here, Nico, there's been an industry effort here in aid of Ukraine, of course, which is the ongoing war between Russia and Ukraine here. And the iGaming industry has come together in a really aspirational charity effort in order to raise funds for the people who are most vulnerable in Ukraine at the moment. And I want to just start off today by highlighting this effort because, as you can see here, the gaming industry supporting Ukraine relief is nearing £200,000 in that has currently been raised in aid of the Ukrainians. There's a £250 goal here, and as we can see, the likes of Betson have been incredible with the £25,000 donation here, and several other organizations who have been incredible in the efforts here in order to help the Ukrainians. So I wanted to also start off by asking Elizabeth here in the background, our marketing coordinator, if she is able to share the link to the efforts here in the chat, so that people can have a look and consider if they want to contribute to this donation. It's been a bit of a silver lining, you could say, in the in the crisis here, the fact that so many people have come together in aid of the most vulnerable people, even though we don't necessarily know the people directly who are suffering from this crisis, but still, as human beings, I think it's a really great thing to see that we are able to come together in this way.
Exactly, and although we already mentioned it last week, of course there are companies who supported with donating big amounts of money. You just mentioned the Betson Group with 25K. Carolina, she herself donated, if I'm not mistaken, 2.5K. Rasmus, one of the other founders of this initiative, has donated 5K, but it's everything literally helps. So even if it's just £10, £25, £50, we can't repeat it too often. Every little thing helps. So just donate whatever you're willing to do, like and share this initiative, and I'm pretty sure this will be used for the right cause.
Absolutely, I couldn't agree more here, Nico. And so again, as a final point here, consider if you'd like to donate whatever you can afford to this cause, even if it's £5, £10, £2, whatever it may be. But let's make sure that the industry can come together in order to reach this 250K goal. It will be great when we do this update next week to potentially say that this goal has been reached. But let's see. In any case, Nico, I know that you have been hard at work here last week in order to confirm a special guest that we have here today, Nico. Can you give us a little bit more insight here on the next topic here?
Yeah, so Feda Mecan, he is one of the leading affiliates we know within our industry. So he started, I'm pretty sure he will introduce himself way better than I can do it. So I just met Feda when I entered the industry back in 2014, and he was running an affiliate website aiming for sports betting. He sold this business back in the days, and then he founded KaFe Rocks. And cutting a long story short, with starting with just the co-founder, roughly 2 or 3 people, he established a home for 170 people within a couple of years. We're not speaking about more than 3 to 5 years. And this company has been sold by Feda. So he has some deep insights about the affiliate business, and we're just trying to get as much out of him as possible. Unfortunately, the overall deal with the Glitnor Group is disclosed information. We will just try to get as much information out of him as possible, and I just encourage the audience as well. Give us some questions which we will then discuss with Feda as well. And I'm just thrilled to see that guy on our panel as well. It will be a lot of fun. Our first external guest, right?
Very exciting. So shall we welcome here into the sphere?
Let's do it. Let's do it.
Let's see if we have the crowd. There we go. Good morning to you, Feda. How are you?
Hi, thank you for the invite. How are you?
Very good. We're very excited to have you here. And as a Swede, I must just start by mentioning here that I can very clearly see, I'm very proud to see the Zlatan Ibrahimovic shirt here behind you representing.
Yeah, I had to find a connection. The Swede-Bosnian connection was like, it was too easy, right?
Absolutely. Fair enough.
So first of all, thank you for all the credits to Nico, but I have to take one away from me. I was not the CEO of KaFe Rocks. I'm one of the founders, but the real brain as the CEO was Tim, another co-founder at the beginning. Well, on the heavyweight, that was a good joke. So yeah, thanks for having me.
Absolutely. If I may, Nico here, I have a first question to you, Fred. Obviously, you just completed the sale of KaFe Rocks to Glitnor Group in a very interesting deal that took place and that was announced here a couple of weeks ago. And I'm always very curious how these things happen in the first place. So like, when you decide that you are curious to potentially sell KaFe Rocks, or you're open for a deal like this, how does the first conversation take place? Like, how do you strike the conversation with Glitnor in this case in order to start the process of selling a company?
I would say, so as always, a good business needs to be open-minded. And we were very aware that the whole business is changing and that we need to improve and change. You're fighting against public listed companies that are way bigger, have other financial funds. We did some acquisitions that were always paid by ourselves without any outside funding. But we always had the main goal to keep the culture, keep the company, and have growth of the company and the project itself at the forefront. And funny enough, I always say this industry has a lot of revenues and money in it, but actually not that big amount of people. So somehow everyone's always talking with each other, and one leads to another, and suddenly you're having a coffee with the CEO of Glitnor, and you start talking. And then for us, from beginning on, it was the foundation of the whole talk and the whole deal was always a very cultural one. And culture doesn't only mean how we work; it also means how we want to grow, what kind of mindset we want to establish. And yeah, like I always say, this industry is way smaller than people think. That's why we always have to behave.
Yes.
Which you always do.
Yeah,
so if I'm running around on a venue asking, okay, who's one of the nicest people who always hits the tone? It's you, Fetcher. Right?
I'm well known for being very, that as well. So yes, I mean, for us, it was really like, we were overall open-minded. We of course had talks before, we were approached, but in most cases, it was just not the right fit. Because again, I think I wrote it on LinkedIn when the announcement was there, that this is not really an end. It's more or less just the next step for KaFe Rocks, for the overall company, because I think there is so much in front of us and the landscape is changing. I still think it's changing daily. Everyone wants to say, oh, it's now settled down and there are only big ones. I honestly don't believe in that. We started 4 years ago, and everyone said, like, you have no chance. Don't even go for it, because it was already settled and everything was kind of done, and we were still able to grow. So yeah.
And you significantly grew, right? With onboarding 170 people within a time span of 4 years. We're not speaking about a small company, right?
Yeah, the growth, and not only financially, FTDs or whatever we measure, onboarding 170 people overall, and as you know, we were probably one of the first ones to go remote first from day one on, way before Corona did that to everyone, and a lot of things were just not there. We had to find solutions and ways and approaches, because there were some best practices, but it starts with time zones. It goes to many other topics, and 170 people onboarding. I think, some headaches, a lot of fun, but that's the challenge. I mean, no doubt. I don't like when people pretend everything was easy and went by the plan once it's worked out. But that was a challenge.
Can I just say that I'm embarrassed to say that I didn't know that KaFe Rocks was an abbreviation for two of the founders. I thought that cafe was like an actual cafe where you drink coffee. I guess you heard that many times.
Yeah, I hear it many times, but the very honest answer is we were not very creative with the name, right? And then we rolled with it somehow. We got the logo. It was fine. We really liked it, and we just kept it. Then the third one is the rock, so we kind of everyone's in there.
Yeah, I like it. Yeah, I mean, Feda, you mentioned the company culture here, and KaFe Rocks obviously has a very particular company culture. You're remote first, and just a couple of weeks before the announcement of the sale, you announced that you are implementing this unlimited vacation days program as well. So when you go through an acquisition, how does the discussion go in how you merge these two cultures together? But, like, for example, the unlimited vacation days, will that stay now with Glitnor Group, or is that now going to be changed? Like, how is how is this experience for the employees?
I think this is very much still open to debate to some degree. What the whole idea of the acquisition is that really every company still works very independently, because what we believe, and that's where we really got very easily along with Glitnor, was that they are also buying the teams and the knowledge and the brains. So why should anyone pretend that suddenly these brains are not useful anymore? We see that a lot, obviously, and in some acquisitions, that it's all about like synergies and how to cut costs. Right now, it's really about like let them flourish and let them develop into something bigger. The unlimited vacation was yes, that was introduced by us. It's more complex than it sometimes sounds, because you have everyone's like there are always two comments on this, right? Like there's the comment, no, it's going to work anymore. We still have the policy that work has to be done. But the other, and that's definitely a very valid point, is people tend to overwork sometimes if you go down that route. Like, oh, I can take a day off because I don't know it's going to be rated. And that's something we are really aware of and really looking to be protective of our people, because we are not there to burn anyone out or whatever. We really looking that people get enough rest, that they have a social and private life, and not suffer working and actually enjoy working. And again, these kind of talks sometimes with some things we will see how it will develop with Glitnor together. But right now we are just operating as we are and taking it from there.
All right, cool. So the operations are still separated, so to say, and
yes.
the long-term process that you will merge long-term, so to say, with Glitnor.
Yeah.
Okay.
I mean, obviously, one part of the merging is me going into the overall board. That's obviously one, but overall, it's really like everyone believes in all parts of the company and that they should and can develop independently. And then again, the cultures are. This policy might not be the same, but the basic culture and understanding how we want to work and how we want to treat people is very, very similar. And that's what worked from day one on.
Oh, fair enough. And also, Nico, feel free to chime in here after my question with the last question from your end. But Feda, again, going into the negotiation stage of this deal, like, did you have a particular let's say negotiation tactic that you went into? Like, I mean, how do you establish what is the price of the group, for example? Like were you playing kind of hardball here, or were you trying to make a deal happen, or how is the communication here between the two parties? Because I can imagine that it's not easy, to agree.
Yes, and I think a good salesperson will adopt to the other side as well. So in this case, both sides were very, very honest and open from day one on. So it was more about, we first exchange our vision and where we want to see the companies and what we want to achieve, especially. Yes. And then we took it from there, and that made it so. Back in the days when I was negotiating affiliate deals myself, that's a few years ago. You get older and you don't do that anymore. You just go to the drinks. But back then, I think affiliate managers who worked with me, for example, will remember that I actually was always very straightforward. I think there is a lot of waste of time and people start super hard bowling, and then the other side, of course, does the same. So I think the right approach here that we went for was really to first see if we can click together, and then find a healthy way for both sides, because how I see a deal, and how I always saw a deal, even when I sold my company 4 years ago or 4.5 years ago, was both sides need to be happy at the same time, but at the same time have some pain. And then that's very balanced way to do business, because there is, if one side has the absolute perfect scenario, the other side is going to be suffering. It's simply like that.
Yeah, fair enough. Like you're saying, we're operating in a small industry, and if you are attracting this reputation of being a hardball and trying to grab everything at once, it's going to be difficult perhaps to continue to do deals in the future as well. So an approach where making both parties happy is potentially the most sustainable way of doing business in our industry.
And for us, because for us, everyone who works at KaFe Rocks was very important. So we really wanted the company to go down, to keep growing, to be KaFe Rocks. And that's why I would say the amount of potential buyers was very, very small, because the philosophy was very specific from our view. And Nico knows me for quite a while. I like to keep my principles, and we all do. And Glitnor was the perfect fit there. That was the main point to start everything, to be honest.
Interesting. Nico, any question here from your end? We're going to start rounding thing off, and we might have a question from the audience as well. Let's see as well.
Yeah, I just want to underline one fact, as we already see comments flying in. One of them is from Hanan Greenberg, who was the head of affiliates for Ladbrokes back in the days, and he just mentioned Feda Mecan, you're a star, and this just amplifies and shows what kind of value they see in you for keeping your word, for keeping your principles. And this is also one of the things where I just value you as a person. And that's why I'm pretty happy to have you just on this little cozy couch with us as well. One thing, Fetcher, I know that you like talking numbers, right? You already mentioned FTDs. So what kind of FTDs are we speaking about when you actually, started selling the company? How many FTDs have you been able with the KaFe Rocks to transfer to the operators on a monthly basis?
It was around 5 digits and more. So yeah, that's very. But the issue I have a little bit with how we deal with. That's going to be now a very, very debatable one. The issue I have with this, only looking into FTDs or only looking to revenues, is the mistake that many operators do as well. So an affiliate manager gets, for example, FTDs as the main measurement, and he's going to overspend because he doesn't look at the value. And that goes around like you can. That's why I'm very careful. For example, for us, we only did SEO traffic, which is simply a very strong value. We never did anything like no media buy. Again, there is nothing to say against the company who does media buy, but you have to kind of put everything into context and calculate your value and ROI. So this is where I'm a bit. I think I'm very careful with. I love numbers, but it's all about getting all the right numbers together. Like measure what matters and then discuss it. The industry is getting better at that, but we still have there is still some way to go.
Fair enough. Yes, I guess that's the debate as we go forward into the future, SEO affiliation versus more forward thinking and organic affiliation, media buying, and also streaming affiliation as well. That is going to happen here. As a final comment today, we have a question here as well from Hannah Greenberg, who's asking, how do you manage your time? You're a busy man, Fred. I mean, how do you manage to get everything together? Because I would imagine that if you are not careful with your time, you can work 24/7 with the amount of tasks that you have on your to-do list. How do you avoid overworking and still doing everything in your power to achieve what you want to achieve?
Well, it took some time to learn things. It's when you're younger, you tend to overwork sometimes. But for me, it was once we got kids, it was like clear that I have to take a certain discipline because, again, kids are important. But it's being very to the point and fast. So I always apologize if I meet someone fresh in the business and we are doing business. It probably will happen that I upfront apologize that my emails usually don't contain "Hi, how are you?" and "Best regards," and things like that. I like to come, again, Nico knows me for a while, but I like to be to the point. And people are amazed how much time this can save, and really ignore everything that doesn't bring you further in the big plan. Just ignore it. Like, people are very easily distracted by, oh, this looks like an interesting deal, but if you look at in the big in the context and the big picture, you realize it's not changing a lot. So sometimes just be good at ignoring things. And Hanan asked me that question with a beer already once, and I probably didn't have a good answer. So
second try, yes.
Yeah, second.
yeah. Great. Well, thank you so much, Feda Mecan, for joining us here today and for giving us some insight into the acquisition. And I guess I'm speaking for you as well, Nico, when I say just the best of luck now with the acquisition here, and best of luck with the future between KaFe Rocks and Glitnor. And we are looking forward to cover any upcoming news that you have here as well in the future as well. Thank you so much.
Thank you for the invite. Thanks. Bye.
Bye.
Bye-bye. Thank you. That's brilliant, Nico. How would you summarize this little chat here with Feda?
Yeah. So first of all, it was interesting that he specifically did not, had money in mind when he was selling the company. He was specifically looking for a perfect fit with respect to the mindset and how things might evolve and will evolve at KaFe Rocks, keeping the company structure and keeping, how they actually work with the first remote first approach. And how open he just talked about, like, okay, we had a plan. We needed to adjust the plan. In the end, it wasn't all perfect, but it worked out. So it's interesting to just read between the lines of just the news which was floating around with the headline KaFe Rocks has been acquired by the Glitnor Group. So there's so much more to just take into account when you actually sell the company and you still love your company. And this is something which Feda pretty sure has lined out.
Yes, absolutely. And Hanan comments here as well that Feda is online 24 hours a day. And so again, going back to the time management.
That's a fact.
Here.
That's a fact. No lie. That's a fact.
As a founder, you do what you have to do. It's
exactly.
It is like that, and it leads obviously to the success here that we have been seeing. So great to have Feda on here as well to give some more insight on the KaFe Rocks and Glitnor merger here. Let's say the acquisition. Nico, shall we move on?
Yes.
What shall we jump into next? Would you say, my friend?
New York. Yes. Let's jump into
always reoccur a New York topic. I like it.
Exactly.
Yes, today we have really good, interesting insights. But what do we have in front of us here?
A status quo of you already had the podcast with the Senator Adebu, and if I'm not mistaken, we already within last week we already touched on the topic. That there's a new bill floating around which will allow iGaming or online casino becoming reality in the state of New York as well. And you had the chat with Adebu, because he already pushed the bill allowing sports betting in the state of New York as well. So Mr. Adebu for sure knows how to push things through, or how to actually gain a vote to make things happen for the iGaming industry. So could you just give us a little bit of what you have been talking with Adebu as well?
Yeah, first of all, I must just say that it's incredible to me the mainstream recognition that our industry is currently getting, and the fact that reputable politicians, media personalities, tier one media people outside the industry is willing to be seen in the context of the online gambling industry. And so the state senator, Joseph Adabo, kindly agreed to have a conversation with us here the other day in order to give more insight into the current status of trying to legalize online gambling in New York. And as we all know by this stage, online sports betting is legal in New York, but not online gambling. And from the point of view of the American operators, the online gambling opportunity, the online casino opportunity is where the actual profits lie. The profit margins are much better, and that vertical is just a much more profitable vertical than online sports betting. Now, what is interesting with the proposed
one
bill,
second, Pierre.
Absolutely.
Because yesterday I just did a little bit of research to just underline how more profitable it actually is, right? So when we take a look at the last numbers which had been reported from the handle of New York, which is $1.54 billion. So this is the handle, that's the stake. That is what people actually put at risk, right? There are winning bets, there are losing bets, right? And the margin in between the stake and the winning bets, that's the revenue which actually is for the operators. So for the last numbers, $1.54 billion, the revenue of the operators has been $92 million, which is 6% of the overall handle. So taking into account sports betting, you always have an underlying sports event, and then you have to deal with risk management, adjusting the odds, etc. So 6% actually stay at the operator. If we compare this with casino, we are talking about the value RTP, which is return to player. And the RTP for the online casino usually ranks around 80 or 85%. MGA requirement is that the RTP needs to be at least 82%, just taking these 82%, which means 18% of the overall handle will stay at the operators. And these are the hard facts. So while sports betting, just for last month, because we don't know how underlying matches actually turn out, was 6%. Online casino is roughly 15 until 18%, and that's the revenue which will stay at the operators, and that's why it's more attractive to actually offer casino, as it's more reliable revenues, and for sure much higher from the operators view. This is just the insight I just did yesterday. Sorry for interrupting you.
No, absolutely. I would like to question that number a bit, the RTP 85%. I mean, where is the average, as far as I know, from NetEnt game, for example, unless it's in certain markets, will be closer to like 97, 96% RTP usually.
You're talking about the RTP. There you go. RTP average.
Exactly. Like Tony mentioned here as well. Yeah. I presume that exactly this is would be a particular market with like, for example, in Germany it was floated, right, that to lower the RTP in order to meet the tax requirements to that type of number. But generally the RTP would be floating more towards like 97, 98%, something along those lines for most games, unless it's like a branded game. So NetEnt would partner with a major brand, for example, and then a part of the RTP goes to the major brand, and then you would see maybe 96% or something like that. But still, I think the point here more that is that the turnover is much quicker, right? So
exactly.
You would play in a more sustainable kind of every 2-3 seconds you have a new spin, so to say. Whereas on the sports betting side, one sports bet, is the bets are occurring at a much slower pace, let's say. I guess that would be where the difference lies.
Exactly. So in Germany, authority requirements is minimum spin time of 5 seconds, right? So this is what you can compare. While you need underlying sports events for sports betting, you can continuously deal with turnover and offerings for the slots and casino side.
Yes. And so this is why it's fun to do these things live, Nico, because we get corrected very quickly here by the chat who points out the actual numbers there, which is great.
Exactly.
It's interesting to see as well. So thanks for pointing out this, both Tony and Andrew here as well. That the fact that the RTP is much higher, but obviously a casino player would generally turn over more money than a sports betting player essentially, and that's where the margins come from. But nonetheless, here jumping back into New York again, and the kind of upcoming potential legalization of online casino, which again is the more profitable vertical. So Joseph Adabo, he mentioned very clearly here that the New York State Senator, he said that sooner or later we will see online casino being legalized in New York. I asked him as well, do you think this bill will be passed this year? And what type of opposition is he meeting? Because it's interesting to kind of get a little bit of an insight into US politics and how it works. And he didn't really give much nuance here, but it was quite clear that he has gotten opposition this year. And I got the impression that he did not expect this bill to be enacted this year. Into the budget, but again, he reiterated that sooner or later we will see online gambling in the state of New York. And also, what is interesting here is that the proposed bill that Joseph Adabo is championing is with a proposed 25% tax rate on the gross revenue, as opposed to 51%, which is the current tax rate for the sports betting revenue here. So it's quite interesting to see that Joseph Adabo, he is actually trying to push through a bill with a much more reasonable tax rate on the online casino side. And if he would be able to enact this bill into law, it obviously sets a precedent for other states to follow suit. So for the audience, probably most of you guys know already, but there's only 5 states currently which allow for online casino in the United States, as opposed to, I think there's like 21 states at the moment which are allowing online sports betting. So there's it's a skew essentially between the states that allow sports betting and the states that allow both sports betting and online casino. And for the American operators to reach the EBITDA targets that they have in a couple of years, for example, DraftKings is aiming for a $2 billion USD EBITDA once the market matures. We have to see more states opening up for online casino, and this is the do or die, in my opinion, for companies like DraftKings and other operators to justify the high market caps that they currently have, in order to live up to the expectations that the shareholders have on them to produce the profit they need to produce in order to keep these high market capitalization. So what's happening in New York and the work that the state senator Joseph Adabo is doing right now can very well set a precedent for a glim future or a bright future for the rest of the United States when it comes to online casino. And Nico, I know that you have been thinking here about like how does it work? Like how does a bill go from a bill into an actual law here? Is that something you want to talk about as well?
Yeah. So this is something you can actually look up, right? So it's the nysenate.gov URL where you can look up how a bill actually processes. And if we can share the screen, because I already looked this up, here you can see, first of all, it's a bill which will be introduced to the overall Senate. Then it's discussed in committee, and then it actually evolves to an on-the-floor calendar. And as soon as it's on the floor, then it either passes the Senate, or it will be headed over to passing assembly. Then the overall bill will change once again. And when it then gets at least 50% of the votes from the Senate, then it will be delivered to the governor, and then it will be signed by the governor, and then it will finally put into law. And if we I'm sharing this one, which is the Senate Bill S17D. And this one was the underlying bill for sports betting. And there you can see, view the actions. So it was the printed number. It all started in January 2019. And in January 2020, it was reported and committed to finance. So what it actually did was, it was included into a finance discussion when the overall, dealing with budgets and what tax revenue streams the state of New York is considering. And then let me share this one as well, because this was the underlying sports betting bill. It was the bill A 3009, and here you see it was introduced in committee, on the floor calendar, passed the Senate, has been delivered to the governor, and then signed by the governor. And when we now take a look at the actions, it evolved very, very quickly, starting in January 2021, and it had been signed by April 2021 as well. So within a time span of just 4 months, it turned from a bill which had been introduced to the Senate until it actually paved the way for sports betting becoming reality. And now, keeping in mind that it all started with this bill S17D, then we know how long it actually takes from actually bringing a bill into the Senate until it will finally being decided. I will just share the link on the within the chat as well. But one thing we should consider is, as casino is already live, real estate casinos are already live in the upstate of New York. Sports betting, online sports betting, has become reality in New York as well. I'm pretty sure that iGaming, online casinos, will not take that long. And by end of this year, I'm pretty sure it will be decided by the Senate already. If it then will be pushed into law, we don't know yet, but I'm pretty sure by March, April 2023, it will already be in place.
Yeah, exactly. And so the main opposition that Joseph Adabo will be meeting here is the fact that New York State, the political landscape is very opposed generally the online casino efforts. So the previous governor made it very clear that we will never allow online casino in the state of New York. Now, since that statement has been made, it seems that some politicians within the state have warmed up to the possibility that that this can bring, especially considering how much extra tax revenue is being generated at the moment from the online sports betting efforts that they have been taken here. And couple that with the fact that the New York State and other states in the US are running at quite big deficits at the moment due to COVID, and we start to understand why the states within the United States are considering to legalize online casino as well. So it will be interesting to see here as we go forward now, even though Adabo is not anticipating that we'll see this written into law this year. Again, he reiterates that he thinks that this will be a case of sooner or later we will see online casino.
Yeah, and what we can see from how a bill actually processes until it will be filed into law, it takes a lot of lobbying efforts until you see the supportive or supporting actors, which also need to be part of the Senate as well, until it actually passes the Senate as well.
Absolutely. And so, Nico, I mean, speaking about this in general, I would like to jump over. We only have 10 minutes here today. And by the way, hello to David as well, and to everyone joining us today. We are live. We're being fact-checked live. That's how it's supposed to be. But I would like to jump over to another topic here, which is the ever-recurring interesting affairs of DraftKings, which is almost like watching a soap opera, you know, for those who are interested in the stock markets. And DraftKings is a very interesting company here. I'm gonna share a couple of screenshots here with you guys today to just kind of showcase what's happening within DraftKings at the moment. Look at the movements of the share price since the start of the pandemic here in 2020. You can see it remains pretty flat, and then 2020 we see an increase, and then obviously the start of the pandemic it went down. And during the pandemic, we saw the rise of DraftKings here, which peaked at a $25 billion market cap earlier in 2021. Before it came down a little bit, and then it peaked again in September, as you can see here from the red graph. And since September, we have seen the decline of DraftKings in terms of market cap here. DraftKings has lost 72% of its value. So essentially, it's gone from 25 billion USD market cap to a 7 billion USD market cap. And so the question now that starts arising is, where is the bottom for DraftKings? Like, where can we expect the share price to even out? And we have the likes of Morgan Stanley, for example, who have been very bullish on DraftKings since this decline, where it went down to about $17 US. And Morgan Stanley make the argument that we've seen the bottom now, and we'll start seeing a rise again in the share price of DraftKings. At the same time, you know, what is interesting is that it's not that DraftKings have not been performing the way they are expected to perform. It is rather that shareholders are losing patience in these high-value, forward-thinking, future-driven organizations like DraftKings, with these very, very high market caps, despite not being profitable. And in fact, you know, DraftKings had a net loss of $1.5 billion USD last year. And so shareholders are kind of starting to doubt if DraftKings' vision is going to come true. Now, then we can ask ourselves, like, where is the bottom in this share? Because obviously they've lost 71% of the market cap. You would think intuitively that we have to have reached the bottom at this stage. But just imagine one fact here. And the fact is that the market cap is still $7 billion for an organization that is only focused on the US market, right? They are ring-fenced themselves into the US market. They have communicated so far, at least, that they are not looking into any geographical diversification. They are only focused on the US market. And so to justify a $7 billion USD market cap, you would expect that they should at least reach 1 billion USD EBITDA, as in the profit in the organization should be at least 1 billion USD in order to justify the 7 billion valuation of the company, if you want to call it like that. Now, how much is $1 billion EBITDA? Can we compare that to something? Well, I think it's quite interesting to compare to Flutter, for example, which is kind of one of the biggest online gambling companies in the world, who is very well geographically diversified. And in 2021, Flutter made 1 billion euro. I think I'm not gonna mess up the exchange rate. I think it's 1 billion pound. They made EBITDA in the entire world, right? And now we are talking about an organization that has gone through the last 10 to 15 years of merciless aggressive expansion and optimization of their organization in order to maximize profits. And so they have had a long time in order to build this profit on a global scale, right? So to reach 1 billion USD EBITDA is not easy, and especially considering in the US, where there is so much uncertainty from a regulatory point of view, where DraftKings are at the mercy of regulators opening more states, both for sports betting and for online gambling. Couple that with the fact that they also have to optimize the marketing spend and put a brake on the marketing spend at some point in order to reach significant EBITDA margins. And you start realizing that DraftKings have a quite big challenge ahead of themselves in order to reach this high profitability. All the operators in the US have talked about they want to reach profitability by 2023, but the question remains, what type of profit margins will they be able to achieve? They don't just need to reach razor thin profits. They need to be able to accumulate a substantial amount of profits from the US market. And we should also not underestimate the fact that responsible gambling in the US market is in its infancy. And if it's anything we've learned from the European side of the pond, is the fact that when you overdo the marketing for the online casino business and online sports betting business, it eventually comes back to haunt you. And this is obviously what we are seeing now with the regulatory headwinds in Europe. And so there's a third concern there, which is in the long-term US market. Will this aggressive marketing and not the best focus on RG eventually come back to haunt the American operators, as it did for especially for the Scandinavian operators here a couple of years ago. So, it's quite interesting. I mean, that being said, that is the bearish argument for DraftKings, and I guess the bullish argument is the fact that DraftKings have been able to achieve a really, really solid retention rate. And what Katie talked about yesterday in our Twitter Spaces forum is the fact that the focus will now start to shift from massive marketing expenses into much greater retention efforts. And if you want to be successful and keep your market share moving forward, then the retention efforts is where the focus will lie, not necessarily as we go forward to invest more money into acquiring new players to the same level as we've seen so far. But that is the bullish argument for DraftKings, that they have been successful in their retention rate so far. What do you think, Nico, here on DraftKings?
Yeah, so first of all, there was an interesting graphics which you shared last week, and once again, shout out to Robin Reed, who gave some insights about the retention rate of DraftKings within their first 3 years of operating as a daily fantasy sports, where we could actually see. I'm just speaking about New York and sports betting operators. Of course, Caesars, they gained within the first 2 or 3 weeks, they gained the pole position in acquiring new customers. So the customer bases, their handle was going up. But after these 3 weeks, when their massive bonus, deposit bonus of $3,000 has run out, the handle actually dropped, and as of now, they're in third position in just the market of New York, while the heavyweights of FanDuel and DraftKings were gaining more from the overall handles as well. And this is just how a sustainable business actually should look like, right? Onboarding a player and keeping that player. And this is the golden nugget, the thin line in between how to actually spend money and how to actually gain sustainable revenues. So we will just see, because it seems like the overall US market is a do or die market. How it will actually turnout for the bigger operators. And as you mentioned, FanDuel, they have not been that aggressive with their marketing campaigns, with their spendings to onboard new players. But as of now, they are leading the pack for their New York operations.
Absolutely, Nico. And to start rounding things off here today, and it's great to see Katie here chiming in as well in the chat, and thanks for great input here yesterday. We're gonna start rounding off here a little bit, Nico. And we cannot do this weekly news update this week before we mention the always flamboyant CEO of DraftKings and his ability to sometimes shoot himself in the foot, right? because he made a tweet here the other day. Obviously, it's not easy being Jason Robbins at the moment with the falling share prices here in the last 6-7 months. There's been a bit of a negative roller coaster here for DraftKings, and being as the CEO of such a big company in the American landscape with very aggressive institutional investors on your back, it cannot be very good for your mental well-being, if you will. And we saw here the other day an interesting tweet that came from Jason Roberts, almost looking like a veiled threat. Here, I'm gonna put you up to that. So I'm gonna read this. We did it yesterday in Twitter Spaces as well, but I'm gonna read this in my best Liam Neeson from the Hostage voice. Okay, I'm gonna from Taken. Is okay.
That's good. That's good.
Jason Robbins said, "If you sold DraftKings today, just be aware that my team and I are on a mission to make you regret that decision more than any other decision you ever made in your life." Oh my! I get shivers, Nico, from listening to this in Liam Neeson voice, honestly, because it is a funny tweet. I mean, you cannot say anything else. It's entertaining, right? And what is made more entertaining, of course, is the fact that how did the reactions on Twitter came to this tweet. And look at the top comment here. So the first person here very, very gently points out here to Jason Robbins that many of the C-levels within DraftKings have been selling shares in the last couple of days and weeks. And so Mike Diasoki here, he points out that what about all the other ones who sold 1-3 weeks ago? Are you and your team going to make them regret that decision more than any other decision made in their lives? Does that include insiders who sold DraftKings? And so that's the first tweet. And the second tweet comes up here, which is the CEO complaining about people selling his stock, while himself have sold more than $100 million worth of stock in the last year as well. And so this tweet, of course, did not go down very well for Jason Robbins here. It came back to bite him a little bit in the, first of all, the tone that is used in the tweet, of course, is not particularly welcoming, let's say. And then secondarily, the fact that, all the DraftKings C-levels and himself had sold them a massive amount of shares in DraftKings. But, you can't have your best days here all the time, I presume, Nico. We have those days sometimes as well, where we, by mistake, sell $100 million worth of shares here and there without thinking twice. And, it happens on a Friday afternoon when you're not careful. You know what I mean?
Exactly, before you actually, enjoy a margarita. And this is something we should never forget. There are very, very smart people out there, and especially if you just, speak out publicly, and you literally forget about, all the stocks sales are also public information. It doesn't take that much time to actually see that you and your team already sold them. And they sold them. They didn't buy it, right? So it's quite interesting. And as you already mentioned, it didn't play out that well.
No, it didn't. And after this tweet, it should be mentioned as well, is that the share price of DraftKings fell another 5% at its peak yesterday. So I think Jason has a lot of people here to find and make them regret this decision, essentially. But let's let's see what the next part of it is. It's entertaining. Jason is positioning himself as the Elon Musk, if you will, of the iGaming industry. And you know what, Nico? I think the more profiles and the more people we have in this industry who can be themselves and who can bring passion to the table, the better off we are as an industry. That would be my final words here as we round up the hour today. Yes. Nico, it's been a great hour here as per usual. The time flies, and we didn't even have time to cover the fact that Malta is on its way to exit the FATF grey list here, which is an important point as well. Just quickly can mention this, that the action list that was put together for Malta has more or less been completed, and now the FATF is looking to visit Malta to see in person how these action points have been, how this action plan has been enacted, and in order to figure out if it's a sustainable approach that Malta has taken here in order to action this action plan. So that's also some quite interesting point to figure out here. So fingers crossed here for Malta as well as we go forward. But what do you say, Nico? The hour is up. It's 11:04 here in Malta, and you know what that calls for? I think it calls for a margarita on the beach. What do you think?
Yeah, indeed it does. And although our kind of promises with the cliffhanger of, we will talk about California next week, we didn't even have time to speak about California as well. And as the both of us, right, and this is something, a shout out to the audience as well. Me and Pierre, we are lifeguards at the beach of Malta, so that's why we are always on a, we are pressured to leave this quite on time to actually secure the beaches with our margaritas in hand. And once again, shout out to the great audience for even correcting us if we are getting things not right, with me claiming the RTP from MGA with an 82%, which is 92%, and they are thinking about lowering to 85%. So once again, sorry from my end, and shout out to the audience. Maybe it was just my way of engaging the audience by correcting me. We don't know, but one thing is for sure: I will just meet you, Pierre, and looking forward to some sunshine and a nice margarita.
Absolutely, Nico. You're a mystery. You never know what you're having. I like that. All right. Thank you so much, Nico. Thank you to the audience for chipping in today. It's Friday. Let's enjoy the last day of the week here, and we sail into the weekend in a good mood and good light. And thank you so much, everyone. And we will see you here next week. And also thank you to our sponsor, PlayZone, for making this happen today. We're really, really happy to have Thomas and the guys of PlayZone on board as well. So make sure to check them out too. So thank you so much. And Nico, I will see you here next week. Let's go have a margarita.
Thank you. Bye-bye.